Following on from the discussion on passive income as it relates to cash and cash equivalent, I'm going to share the different types of passive income along that category of cash and cash equivalents that I have embarked on in myself. Now, the first time I invested, I was probably maybe about 17 years old. At the time, I didn't understand that it was investing. I just knew that there were government bonds that were being issued, and I recognized that the interest rate was higher than what I was currently earning at a commercial bank. I had some funds on a savings account. If you've read my book, Living Loud on a Budget, you would know that I've held summer vacations jobs from the time I was at a very young age. And pretty much at the end of every summer, what I decided I will do is that as long as there were government bonds available to be bought, I would buy a few of them. Sometimes $100, $200 worth, or sometimes $500 worth, whatever I had left over from monies that I hadn't used to pay for my tuition or my fees for university or school or whatever, or just monies that I didn't have on my savings account. So I would put something towards government bonds. And over the years, I accumulated quite a few while I was a student. By the time I left university, I still had a portfolio of government bonds. Now, let me also say at this point that I am not suggesting that anyone go out to buy government bonds. I will also say that in those times, there weren't any issues, or I didn't know of any issues at that time about governments not meeting their obligations. Since then, there have been a few instances where government has not met their obligations with regards to government bonds in different countries, or they have not paid back to schedule, or they have diverted the repayment date. And these are things that you want to be conscious about in your particular country, and whether that is something that is currently happening, and whether government bonds are something that you would want to embark on for yourself. So I pretty much did that up until the end of university. Once I started working, then I wanted to look for other options in terms of, ways to just save more money or ways to invest. Again, at the time, I didn't necessarily know that what I was doing was this high level of investing. I just know that I was looking for better opportunities for my monies. And there were tax breaks that you could receive for putting money into stocks or putting money into mutual funds and those type of funds at the end during the year, and you receive the tax break at the end of the year, or the tax break, for your income tax purposes. So what I started to do was that any type of extra monies I would come into, whether it be a bonus or just monies that I had, after I put into all the other categories that I had, I started then investing those in mutual funds. So in Barbados, I was probably in maybe 2 of the higher or the bigger mutual funds at that point in time. And I did that maybe up until, I would say, a period of time before I had first went overseas on my first expat engagement. And I still continue to invest in those mutual funds with my bonus, etc. I will also say that, again, the tax benefits in which you used to get for investing in mutual funds and stocks and those kind of things are no longer available in many countries. So again, you need to be able to make certain that that is something that's still relevant in your country. Coming out of there, I got to the point where I started to become one of those investors who didn't necessarily believe what was happening, but as someone who had also invested in an insurance company, which went under, I started to become one of those investors then who decided I want to be able to manage my investment strategy myself. So I went through a period where I pretty much cashed out all the investments that I had, whether they were mutual funds, bonds, or whatever. That most of the bonds at that point in time had already been repaid. So I pretty much went through a period then where I pretty much cashed out all of my mutual funds. Moving on from there, years later, I've also embarked on high interest yield savings accounts, and I've also embarked on fixed deposit savings accounts. And while persons would say that fixed deposits or even high interest accounts are not necessarily good investment strategies, or that they're not necessarily those investment strategies that will give you the level of returns that you're looking for, they serve their purpose. And most of the reason why I embark on those is that I wanted something that would be relatively low risk, because at one point in time, I had funds that I was looking for a real estate investment. And sometimes it takes really time for you to find that correct property that you want to invest in, depending on what your strategy is when it comes to real estate. So I wanted to make certain that the funds were fairly liquid, but at the same time, I wanted to ensure that they were just not necessarily lying around. And that's why I embarked on fixed deposits as well as high interest yield accounts. And high interest yield accounts basically means if you park your monies here and you don't move it for the first, you don't touch any of it within a quarter or within whatever time period the bank stipulates, that they'll give you extra interest. And I do think it's actually beneficial to do that. Even if you don't necessarily have a sum of money that you want to park somewhere and it's just your regular savings account, you can determine how much a portion of it to actually put on a high yield interest account, and then just leave the rest on your regular savings account for you to use at your convenience. Following on from that, quite a few years, maybe not many years now, I actually got a brokerage account as well. Now, I'm not going to say that I'm an expert when it comes to investing on the stock market or understanding bonds and that kind of nature, but I had always had the theoretical background of it, but just never the practical. So maybe like 4 or 5 years ago, I decided for that particular year, I wanted to dedicate some time to learning how the stock market works, how to invest in EFTs and dividends, and appreciation of your stocks and stuff like that. And I did dedicate some time into learning, and I have been able to make some investments in both EFTs and in stocks. And I do actually receive dividends from them. There's still a lot of work to do with my own brokerage portfolio, but I'm comfortable that it is not something that was outside of my reach, or I don't think it's something that's outside of most persons' reach. I think if you dedicate the time to it, you can definitely learn how to do this for yourself. Again, there are countries within the Caribbean where you may not be able to secure a brokerage account, and there are a few banking institutions I see now who are trying to facilitate that for Caribbean nationals. So it's always something that you can look towards. I'll come back in another video and I'll explain more about brokerage accounts and a little nitty-gritty of what I know as an investor. Thank you for stopping by. Please like, share, subscribe, and remember, tell a friend always.